Despite the uncertain economic outlook, it is expected that the demand for platinum will increase significantly in 2023 due to its various industrial uses and its use in the automotive and electronic industries. This high demand may lead to a physical shortage of platinum and potential price increases. It is important to monitor the platinum market and its impact on industries that rely on it. Hello everyone and welcome to Geopolitics and Money, the #1 YouTube channel where geopolitics, finance, commodities, and investing intersect. Subscribe to this channel to stay on top of the precious metals markets, geopolitics, and investing. Be sure to click that bell button so you'll get notified immediately when we publish a new video. The current consensus among economists is that the world economy is on the brink of a recession in 2023. This is due to a variety of factors such as rising interest rates, increasing trade tensions, and slowing global growth. Whether or not this will actually lead to a recession is still uncertain and will depend on a variety of factors. One important factor that could influence the outcome is the actions of central banks around the world. Central banks, such as the Federal Reserve in the United States and the European Central Bank, have the ability to influence interest rates and monetary policy, which can impact economic growth. Additionally, the actions of governments and businesses will also play a role in determining whether or not a recession will occur. While the economic outlook is uncertain, it is important to monitor developments and be prepared for any potential economic challenges in the future. Recession or not, China has been importing large quantities of platinum in recent months in order to build a strategic stock of the rare metal. This is likely due to the various industrial uses of platinum, such as in the automotive and electronic industries. As China's economy continues to grow, the demand for platinum is expected to increase, making it important for the country to secure a stable supply of the precious metal. Additionally, China is also a major producer of jewelry, which uses platinum as a material. This means that the country's demand for platinum could be even higher. Building a strategic stock of platinum can ensure that China has a steady supply of the metal to meet its growing demand and avoid potential shortages in the future. This move also gives China a strategic advantage in the precious metal market. One way in which the use of platinum could increase in the long term is if hydrogen were to become a widely adopted green energy carrier. Platinum is an essential component in several technologies used to generate hydrogen fuel and fuel cells. For example, in the process of electrolysis, in which water is split into hydrogen and oxygen, platinum is used as a catalyst to speed up the reaction. Additionally, in fuel cells, platinum is used as a catalyst to convert the hydrogen back into electricity. As the world looks for cleaner and more sustainable energy sources, hydrogen is gaining more attention as a potential alternative to fossil fuels. If hydrogen were to become more widely adopted as an energy carrier, the demand for platinum would likely increase significantly. Therefore, it is important as an investor to keep an eye on the developments in the hydrogen and fuel cell industry, as it could have a significant impact on the demand for platinum. In the past, we have not been particularly enthusiastic about hydrogen as an energy source. We have seen potential obstacles, such as the fact that hydrogen is not an energy source, but an energy carrier. This means that hydrogen must be produced, and that requires energy. However, we may need to reconsider our opinion in the future. Not only are politicians increasingly choosing hydrogen as a solution, but there is also good news coming out of the US. The American Nuclear Regulatory Commission has approved a design for a small modular nuclear reactor. This could help overcome one of the obstacles in producing hydrogen, as nuclear power can be used to generate the energy needed for hydrogen production. This type of reactor can provide reliable and affordable energy. Surpluses of energy on the grid at certain times could then be used to produce hydrogen. This could be a game changer for the hydrogen industry, as it would help overcome one of the main obstacles in producing hydrogen, which is the need for a large amount of energy. What does this mean for the price of platinum? As the demand for platinum increases, it is likely that the price will also increase. This is because the cost of producing platinum is directly related to the price. As the demand for platinum increases, the cost of production will also increase, which will result in higher prices for platinum. This could impact industries that rely on platinum and could potentially lead to an increase in the price of goods and services that use platinum as a component. A possible scenario for the price of platinum in the long term is shown in this graph from North Star Charts on Twitter. This chart shows nearly 40 years of platinum prices on a logarithmic scale. While we do not want to extrapolate an exact target price from this chart, it is important to note the record price from 2008, which is clearly visible on the chart. This top is more than 100% above the current prices. In a bull market, the price should ultimately surpass the previous record, especially when that record is 15 years old. Therefore, this is the main target price for now. If you appreciate this content, please hit the like button and share this video in your network. If you want to stay informed about the precious metals markets and how global events impact them, make sure to subscribe to this channel. You'll be kept up to date with all the latest news and trends in the industry. Don't miss out on valuable insights and analysis. Hit the subscribe button now. We are not affiliated with any bullion dealer, and we advise to do your own due diligence before investing in platinum. But we do not want to leave you empty-handed and provide you with 5 tips and insights on how to invest in platinum. Number 1. Research the fundamentals of the platinum market. Understand the supply and demand dynamics, the major producers and consumers, and the industrial uses of platinum. This will give you a better understanding of the factors that could potentially impact the price of platinum. Number 2. Diversify your portfolio. Investing in a single asset is risky. Therefore, diversifying your portfolio by including other precious metals or other types of investments can help reduce the overall risk. Number 3. Invest in exchange-traded funds, ETFs, or mining stocks. ETFs allow you to invest in platinum without physically owning the metal, while mining stocks give you exposure to the performance of platinum mining companies. Number 4. Be aware of geopolitical risks. Platinum prices can be affected by events such as natural disasters, political instability, and trade tensions. Stay informed about any potential risks that could impact the platinum market. Number 5. Have a long-term investment horizon. Platinum prices can be volatile in the short term, but over the long term, the fundamentals of supply and demand will ultimately drive the price. Therefore, have a long-term investment horizon and be prepared to ride out short-term fluctuation. Platinum can be purchased in several ways, including bullion coins and bars, ETFs, mining stocks, futures and options contracts, and jewelry. First off, bullion coins and bars. These are physical forms of platinum that can be purchased from dealers, coin shops, and online retailers. They come in various sizes and are priced based on their weight and purity. ETFs, short for exchange-traded funds, are investment funds that are traded on stock exchanges, and they allow investors to purchase shares in the fund which represent an ownership in the underlying assets, in this case, platinum. Investors can also purchase shares in platinum mining companies, which give them exposure to the performance of the company in the platinum market. Futures and options contracts. These are financial derivatives that allow investors to speculate on the future price of platinum. They are typically used by more advanced investors and require a margin account. Last but not least, jewelry. Platinum is also used in jewelry, so that's another way to invest in platinum. However, investors should be aware that the price of platinum jewelry is typically higher than the price of platinum bullion due to the added value of the craftsmanship and design. It is important to note that when buying platinum, investors should be aware of the purity of the platinum, as well as any potential additional costs, such as storage and insurance fees. Thanks for watching. Please subscribe so you'll never miss a new episode. See you in the next one.